We are witnessing bubble-like behavior in the stock market as the stock market hits another all-time high, and I'm here to tell you why I think this is going to continue. We have just witnessed the third fastest recovery in history, and I'm here to tell you there are no signs of slowing down here. So here's everything that you need to know in the stock market this week, and what are some opportunities that I see right now. Let's get right into it. As I mentioned, the stock market, both the S&P 500 and the Nasdaq have hit all-time highs. The Qs have a golden cross here. This has never failed in the history of the Qs. And over the weekend, we just got some breaking news that the big, beautiful bill, the new Trump tax cut plan, has just cleared the Senate and it is on to the House for a vote. Now, there is a self-imposed July 4th deadline, but we know that the Republicans control the House as well. This bill definitely does not come without criticism, as Elon is back in the scene, ripping the utterly insane Trump-backed mega bill, saying that it creates too much debt. And he's right. It will add about $3 to $4 trillion in the next 10 years to the budget deficit. This is about twice as much as the original Trump tax cuts of 2017 added. So if this bill passes, that means a whole hell of a lot of liquidity is going to enter the market. We saw the markets rally after the first tax cuts in 2017. Initially, the market rallied by 12% almost immediately after the bill was signed, and then we corrected about 10%, followed by a 22% summer rally. Now, the reason that these tax cuts increase liquidity is because it provides more money simply to businesses and to the people that actually buy stocks, who are the wealthy. Now, I promise we're going to get into the stocks later, and I do have some breaking potential news on a stock where there might be a massive opportunity, but I want to get through this first because you need to know why we are in the midst of a potential massive bubble here. So reason number one was the big, beautiful bill. Reason number two, take a look at the M2 money supply. Now, the M2 money supply is basically all of the cash, deposits, money markets, etc., that are in the economy right now circulating. And if we drill down a bit deeper, here's the M2 money supply compared to the Nasdaq 100. We are now reaching .com levels of liquidity. In the .com era, the Nasdaq was obviously rising because of the hope of all of these new internet companies popping up. This bubble is a little bit different and it is more substantiated. I will admit that. This bubble is obviously the AI bubble, but it is being really perpetrated by companies that are doing hundreds of billions of dollars in revenue per quarter. We are also seeing the Treasury quietly issue the largest buybacks that the Treasury has ever done. I've covered this in detail in previous videos, so I don't want to get too bogged down into it, but basically the Treasury is buying back a lot of the treasuries that are set to expire or set to mature. This improves the liquidity in the Treasury market and allows for new issuance. Nonetheless, it adds to the liquidity and it is essentially money printing. Another thing I've covered on this channel is how the Fed is slowing down the rolling off of assets from their balance sheet. So they were essentially letting $25 billion a month of treasuries, mostly treasuries, roll off their balance sheet. They have dialed that down to 5. And you can see here the curve was steep and now it is flattening. Based on the last Fed meeting, the testimony from Jerome Powell in front of Congress, as well as some of these speeches from different Fed members, we are now projected to see 3 rate cuts this year, in September, in October, and in December. This would ostensibly take our Fed funds rate down to the 350, 375 range. And part of the reason that M2 money supply grows is when banks issue new debt. So when interest rates drop, there is going to be more easy money. Loans are going to be cheaper, adding to this M2 money supply. Now, speaking of being in a risk-on bubble environment, take a look at long-term bond funds. They are now selling off. This is the type of behavior that you typically see during ultra bull markets. In 2020, back in 2016, you do not see this type of behavior in bear markets because in bear markets, there is a flock to safety. But this looks like the behaviors when we are in the middle of a bull market or in the beginning of a bull market. And then obviously the taco trade, right? The Trump administration has clearly taken their foot off the pedal as it relates to tariffs and says that deals are not needed. They're just going to write letters to the different countries telling them what their tariff rate is. Maybe this was the play all along, which is basically to project a really high tariff rate. The entire market freaks out. And then once you lower it down to, say, a 10% tariff rate, which is what the White House initially wanted, then everyone is like, oh, that's it? Okay, yeah, we can live with 10%. On top of that, the White House is continuously signaling that it is willing to extend the July 9th trade deadline for these deals. Now, speaking of the stock market and how, in my opinion, this looks like the signs of a bubble and a bubble continuing, is if you take a look at the EPS guidance, everyone thought that earnings were going to fall. One, because of the tariffs, but two, because we were overextended. However, this is the second best earnings per share quarter in terms of guidance in 3 years. And if you look at the big tech spending, specifically as it relates to AI, you could see that these are the signs of a bubble forming within a nascent technology. Basically, big tech spending is not slowing down, it's actually ramping up. It says AI-related CapEx is expected to approach 200 to 350 billion in 2025. The spending is fueled by the need to meet growing demand for generative AI, large language models, and cloud-based AI services. So it's not just chips. Companies need to build out data centers. Obviously, they need GPUs, they need TPUs, more on that later. They obviously need software resources, but also software developers to build new software on top of this new infrastructure. And there are still concerns about supply shortages, which then fuels companies like AMD to potentially take some demand or shoulder some of the burden of demand and take some of that market share from NVIDIA, because NVIDIA cannot seem to produce enough GPUs. Now, we could see a slowdown in 2026, and this actually makes sense to me. One, from the perspective of the life cycle of a bubble, at least a technology-related bubble that we've seen recently, which was the dot-com bubble. That was the last time we actually had 3 years in a row of plus 20% gains in the S&P 500. And as a matter of fact, we actually had 5 in a row from 1995 to 1999. Secondly, as I said, the Fed is expected to cut 3 times this year and maybe 6 to 7 times next year. But we know that the Fed doesn't really cut that drastically until something breaks. And if you take a look at the unemployment rate, it is slowly creeping up here in terms of expectation. Last month came in at 4.2%. We have unemployment rate this Thursday, July 3rd, and it is expected to come in at 4.3%. Now, not much is being made of companies cutting jobs due to AI replacing a lot of the human workers. But what if by next year we start seeing a rise in unemployment? Then obviously the Fed will cut drastically, and we will see this 10-year, 3-month yield curve that we talked about steepening once again back to normalcy. Because if unemployment ticks up, then the Fed will obviously have to start cutting rates drastically. So before we discuss some of the opportunities that I see in the market in the short term, I just want to round out by saying this type of scenario does make sense to me, where we are on the cusp of a bubble forming, or at least we are in the middle of a bubble that is forming. And we are starting to see a lot of drivers of liquidity that will likely bring in a new wave of injected liquidity into the market, thus potentially prolonging the bull market massively for the next year or two, growing so large, breaking something in the system before the Fed needs to cut drastically once again. So what are some opportunities that I see in the market in the short to midterm? Well, I discussed this in my last video, but there are quite a few stocks that actually have not come along for the ride, Apple being one of them, as we are getting super tight in this pennant here. Now, with regards to Apple, breaking news just came out last week saying that Apple spent $500 million on Bay Area real estate. Now, they weren't buying condos and chalets. As a matter of fact, there are very credible reports showing that Apple might be on the cusp of making a large AI investment. We know that they are way behind the curve of Meta, of Google, of Amazon in terms of AI. They made a wave of promises surrounding Apple Intelligence and just really haven't been able to deliver on that. So there is a bid out for Perplexity. I'm not saying Apple has a bid out, but many companies are vying for Perplexity's technology. And Perplexity right now is just a private company, and it is potentially looking for an acquisition. We know that Meta is interested. but obviously Apple is interested as well. They haven't made a large-scale acquisition since 2014 when they bought Beats, the headphones company, for $3 billion. As of now, I think Perplexity is valued at $19 billion, which is a drop in the ocean for Apple, sitting on over $100 billion in cash. So there are a lot of rumors that are tying this real estate purchase with the potential acquisition of Perplexity or a similar company, because if that happens and Apple makes a big push in AI, they would need to expand their R&D capabilities and their AI infrastructure. Now, we did buy Apple in the 170s in April, but I do not mind Apple here at 200, especially with the potential of this news on the table. Sure, someone can wait and say, can wait to see whether the rumors are actually true, but if Apple does end up making an acquisition in Perplexity, which, like I said, I'm just following the reports. I don't have any information beyond the initial reports on Bloomberg. But obviously, the stock price will likely fly if that is the case. Another stock that the stock market made an all-time high without is Google. But as I told you, Google broke out of this long downtrend here. And we are seeing positive news in the way of Google Cloud, which is the fastest growing cloud service. It is also a top 3 cloud service. We saw the numbers from YouTube being compared to Netflix, bringing in a similar amount of revenue as the entire company. And last week on Friday, we got news that OpenAI is tapping Google for their TPUs in a bid to diversify AI chip supply. So there are GPUs, which is what NVIDIA produces, and TPUs are proprietary. These are tensor processing units that Google actually develops. They're not necessarily superior to GPUs, they're just different and more focused on inferencing tasks. Now, if you take a look at the entire AI chain, from the chip to the infrastructure itself, to the ecosystem, to the large language model, Google is really one of the only closed loop systems in the entire world. It has its own TPU. Obviously, it has an endless amount of money to hire AI developers. It also has its own large language model with Gemini, and it has the largest ecosystem in the entire world with Pixel, Chrome, obviously Google Workplace, but then we also have Android. Like I said before, Google looks better now, in my opinion, than it did when it was priced at over 200. It is also the cheapest of all of the Mag 7 stocks, still trading at a 19 forward PE, which is wild. I don't know how many of these plays I have to give you. I gave you guys Amazon. We saw a huge pop in Amazon, 3% last Friday as of the time of this recording. I told you that if the tariff fears are out of the window, Amazon gets back to all-time highs, in my opinion. No questions asked. I've been giving you guys these plays consistently, at least you have to admit that. But some of this stuff is really low-hanging fruit, in my opinion, really easy money if you follow the narrative and you follow the technicals. Now, one thing that I'm looking at here, if we are going to get an injection of liquidity and we basically have eliminated the geopolitical fears as well as the tariff fears, if those two things remain, then I could see, and we do get another year of a bull market, then I do see a potential short on gold here. Nothing is confirmed yet. We are still hanging on to this 2025 trend line. But if we get a break of structure, I will be very interested in a short on gold, as the market will then likely favor more risk on assets. We've already seen last week the largest inflows of institutional money in tech stocks. And one other thing I find interesting is that the market has never topped in June going back to 1950. So since World War II, June has never been the top of the market, ever. Now, I'm intently looking at Tesla here as it broke out of that pennant and came back to retest it. As I said before, there is a chance we sweep these lows here at 315, and I will then be interested in another potential long. Obviously, the market is going to keep very close tabs on the robo-taxi story coming out of Austin. We want to see zero incidents, and we need to see this rolled out into different cities. First, it has to be rolled out beyond the geofence location in Austin. Then it has to be rolled out to different cities. We did already see Tesla make history over the weekend with the first ever self-delivery of a car to a customer's house. I think it was a Model Y, if I'm not mistaken, delivered from the factory to the customer's house without a driver, driving on the highway. I also might sell another round of cash secure puts on Tesla. I gave you guys these in another video, made 88% on the last round of cash secure puts. Might then go ahead and sell another batch of cash secure puts as Tesla here is consolidating. Right now, the August 15th 255 puts are selling for $500 almost, just $10 shy of $500. To me, this is free money if you are bullish on Tesla. So I might go ahead and sell a batch of these 255 puts expiring August 15th. Because even if I'm assigned on these, in the unlikely event that I'm assigned on these, I will be grabbing Tesla 23% down from the price that it's currently at. Another stock I gave you guys was AMD as well as SOXL, which is the leveraged semiconductor ETF. But I think AMD continues to be a buy on dips in my opinion. I do think the story with their latest GPU beating NVIDIA GPUs in terms of inferencing, again, as I said, if AI CapEx spending is truly growing still, and there is truly a shortage in the market for GPUs, and AMD truly competes with NVIDIA's GPUs in the way of inferencing, then I could see AMD grabbing some of that total addressable market and it having a positive effect on its guidance as well as its next earnings. Uber hit an all-time high, another stock that I gave you guys on this channel, as it continues to partner up with Waymo and launch in different cities. The last launch was in Atlanta last week. It was announced last week, I believe. And I do think that United Healthcare in combination with Novo is really making the healthcare sector of the S&P 500 look almost attractive here. I am going to wait until we get to this trend line on XLV, which is the S&P 500 ETF related to healthcare. At around 127, I'll be very interested in taking a position here, especially because healthcare is seen as a defensive sector when the market finally turns. I will be doing another top stocks video like the one that I did in June. Go back and watch that and check out all of the stocks that I mentioned there. Make sure you keep me honest. And if you're interested in day trading and want to day trade with me every single day at market open, link is in the description below. I day trade futures and I day trade options. I believe we are the only academy on the internet that day trades futures, day trades options, swing trades options, and does long-term stock investing and macro analysis. I don't know of any other group that does that entire range. And if you have some experience day trading but want to up your game and want to speed up your progress, we are opening up the Trading Mastermind, which has been closed since last year. Doors open up on July 1st. You have to apply to get in. This is no longer something that you can sign up to. You have to apply. If you're accepted, you will get an acceptance letter on July 1st telling you that you're in. So the acceptance and rejection letters go out July 1st, but make sure that you apply below, and classes will start on July 9th. They run for 4 weeks, 2 classes a week taught by me live. This is not some course. If you got anything out of this video, give it a big fat thumbs up. Let me know in the comment section below, what stocks are you looking at? Do you think that we are in the middle of a bubble, towards the end of a bubble? Do you think that we're in a bubble at all? Would love to hear from you. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.